Let's get the latest business news now, and for that we can cross to Jameel Ahmad from GTC. Jameel, what is going on in global markets? We saw a busy session on Wednesday after the US inflation reading.
Indeed, it was busy and it was also choppy with ups and downs. So the consumer price index, which was the CPI, that was seen as a main event headline risk for this week. Actually, it come below expectations on an annualized basis. We had 2.5% against expectations for 2.6% and the previous reading of 2.9%. I'm sorry for so many numbers there, but actually what happened was on a monthly basis, inflation went up a little bit beyond expectations, and this seems to have weakened the hype that the Federal Reserve, the US Central Bank, would cut interest rates next week by 0.5%, which I always thought was ambitious, but because that hype was lowered, we saw probability actually go down to below 20% at one point. That actually led to markets being sold off because lower interest rates on a more aggressive basis is seen as good for stock markets. But at the same time, we still know that the Fed, the US Central Bank, once again, will be cutting interest rates over the medium terms, which saw investors then buy into the stock market somewhat. But I do think things will remain volatile up until we get headlines and updates on what exactly the longer term policy path for interest rates is in the United States.
Well, speaking of, it's a story that we've been covering a lot here on France 24. How have markets reacted to the US presidential debate?
Actually, not so much, because the probability seems to have increased somewhat that Kamala Harris would win in November. I'm still a little bit unsure on that, but because of that probability increasing, some of the financial market risks were not priced in so much. That's because Kamala Harris is seen as like continuing the status quo and the same themes, the same economic headlines and so forth as were already pricing into markets, whereas the unknown would be if the former president came back and we had America, make America great again. I think this time it would have been on steroids and so forth. That's where the volatility likely lies if the former president comes back. I'm not going to say that that volatility is necessarily going to be bad. Last time he was fantastic for the US dollar and the US stock markets particularly, but that hasn't been priced in, which is why the market reaction following that debate and following the outcome seemingly increasing the probability for Kamala Harris. That's why there wasn't so much noise in financial markets following what was a blockbuster debate.
And what can we expect as the European Central Bank gets ready to hand down its interest rate decision?
We are firmly expecting the European Central Bank to cut interest rates again for the second time this year. That's because the European Central Bank have been the most successful when it comes to actually lowering the inflation targets all the way back towards 2%. At the moment, inflation standard is somewhere around 2.2% on an annualized basis. It's come down from 11% just 2 years ago. So the ECB should celebrate that. And what I expect for them to do today is to lower interest rates, signal that there might be another interest rate cut before the end of the year. Some ambitiously think the ECB might cut interest rates another 2 times, but I am a little bit concerned about the growth targets because we've had some weakness in data from the likes of China and the United States this month. The European Union is a major trading bloc, as we know. So I think if they do weaken the economic growth targets, that's going to increase the pressure for the European Central Bank to do even more and be even more aggressive before the end of this year and into 2025.
All right, Jameel Ahmad from GTC, thank you very much for that business update.